Hello friends, how are you? Good week, Vladimir here with you, and this is the weekly review for 10th of October 2011. Well, let's try to understand, first of all, fundamentally, what are we going to have at the beginning of this week. Very interesting two situations. First, the continuing problems on the markets. Second, we're going to see a full optimism market because of the non-farm payrolls news from US. It was one of the major issues for the US, the jobless situation, and to see the market adding much more jobs as unexpected gives very big optimism, huge optimism to the markets, and the investors probably will want to see it continuing. So it's not once time additional jobs to the market, but it's actually a trend, and each month. So it's a good start, and the investors should remember that, and probably would remember that. But the main thing is this one. This is the US dollar index chart. As we can see, there is clear continuing divergence here. Right? There's clear continuing divergence just right here on the daily chart, and we got as you can see, let me just erase it, this line. As you can see, we on Friday just stopped just in front of the 20 Bollinger Band, and now it should go further. Let's take a look on the weekly chart. This bullish divergence we discussed about several months ago just pushed the prices up, and as you can see right now, it's still very bullish, right? It's still very bullish, and the MACD is bullish. Now we are in a very interesting situation as it meets the first resistance area, which is just right here, this area. And well, I do believe, as I said not once, that the US dollar will continue its way up. The only question is it going to correct from here, or is it going to reach the next resistances and correct bigger from there? For this question, let's back for our chart and take a look on some interesting pairs. Dollar franc. This pair is bullish, very bullish, and we said it's going to be bullish just after right here, after this amazingly built hammer, bullish hammer, and then the intervention from the Central Bank of Swiss, and we are going up. But as higher we go, as higher the interest of the Swiss franc currency will be from the investors. Remember that the franc will always be, probably always, as long as Switzerland is one of the most strongest economics, most interesting currency. It's the Swiss acts like a safe haven for investors, and we should remember that, because as higher it goes, the bigger the how it said, the bigger the interest from the investors for this currency, and they will look to buy the Swiss franc. Of course, despite the fact that the bank has some limits for it. But the history actually just proved that no bank could be stronger than the market. Remember that. This is not my saying, this is the market saying. This is what happened always. So I do believe that the dollar franc is going to correct, and based on the rule of the Bollinger Band, when we have a ride from one boundary band to the second boundary band straight without any corrections in the middle, and on weekly chart that's exactly what we have, it's going to stop and begin its stiff correction. Now there is two things to remember. First of all, the move came after this huge bullish divergence. We actually broke now the first divergence, the first resistance, sorry, right here. And now it's going to meet the second stiff resistance, and we have another one, and the most important one around the parity area. So my expectations are like this: it's going to stop somewhere from this area, maybe from 0.9330, maybe from 0.94 plus 0.95, make the correction, will go probably closer to the 20 MA, and then bam, rise up all the way for the parity area, the area where the whole world will begin to sell the dollar franc probably. So I am bullish for a long run. I am very bearish for the next couple of weeks or more. It might be more, I must admit. It might not happen on a couple of weeks, it might happen on several weeks. And based on the daily divergence, it's only question of time when this pair will begin to move. Let's take a look at what we just saw on the weekly chart. That's exactly the areas we discussed. As you can see, that's, if we go zoom out, that's the exact resistances we talked about before, as you can see, just right here. So it's going to probably begin the first correction, then rise all the way up again, and the big move will happen then. Until then, once again, for long run I am bullish, but for short run I believe that from 0.93 or from 0.95, 0.97 maybe, it will begin its correction down the whole way, maybe even to 0.90, all the way from 0.95 to 0.90. If from here, it might be, once again, the 20 MA should be the target. But of course we can't set a target just like this, because it's dynamic, so we will follow it. Once again, for long run bullish, for short run begin to look for the sell. How to begin to look to the sell? Look for the rise, another positive MACD histogram, bearish pattern on the daily chart, and begin to attack. Set your profits on each of the supports. That's the plan for dollar franc. Now let's take a look more interesting pairs. For example, euro dollar, which invalid again this amazing situation. See, we had a down move, and then now we have inverted hammer again, but MACD is positive, stochastic is yet positive, and we had this cross. So is that a bearish sign? Well, I would say so if the 4-hour charts will be broken. If it will break this kind of trend line we have here, we will probably see the next down move. From the market, we have expectations the market to reach the 130 or even lower, and as I said not once, as deeper this continuing divergence will go, the deeper the move it will correct after that, and that's what I expect to happen during the next days actually weeks. That's my expectation for the euro dollar. If it goes lower, just begin to attack. To go lower, look for the break of this trend line. What about the pound dollar? Well, it also meets the trend line. It also sits on the resistance, as you can see. Didn't break it yet, this area, right? Just sit right there. If it will break it, we will probably go higher. As long as it holds it, it might and should return it any moment down. The same, by the way, the target for the pound, the final target for the pound will be, from my point of view, 150, which is just right this weekly trend line. Should meet us around the 150, as you can see here, right? which also was a support area at the beginning of the 2010 year, as you can see here, and February and March, as you can see here. So very interesting situation. Also about the pound, as you remember, during the last week, Marvin King said that they are going to buy more assets, which means to bring more money to the market, which should keep pound lower. But this is for short run. For long run, it should take the pound back to its strength. So I am also bearish for the pound dollar. The way to join from my point of view will be to look for the break of this support, the 154.90 again, and clear close below it. It should give the signal for the next down move. Let's continue. Australian dollar and New Zealandian dollar. Well, Australian dollar is almost the same as the euro dollar, created for us an inverted hammer on the resistance close to 20 MA and should continue down, despite the fact that everything bearish. How to join the down move? We have this clear support area, the 20 MA and its area, which was a little lower than 097. A break below this level together with the break of the RSI 50 down should lead us for another down move. The final target for Australian, as I just want to remind you, was and will stay the 094, and if it will break this area, we are going probably to see it much lower. There is another interesting thing to remember, that on a weekly chart we have a bullish hammer, so it's a straight conflict between the short and the long term. How to join the long term? Well, we will join it only if the resistance will be broken together with the 20 MA of the daily chart and RSI will break the 50 up. Then we can discuss about reaching the 101, 102 again. Until then, the trend is still bearish. New Zealandian, the same story. We have a clear 4 hours trend line just right here, a break below it, and a break of this support area together with the 20 MA and the RSI will lead us for the down move. The down move could take us all the way for the last low or even lower to complete this bullish divergence on the next step, something like that, right? Something like that, and then to see a long-term return. Very interesting situation. Stay tuned, as it might be very interesting for the next couple of days. Let's continue forward. Another interesting pair to follow is the Swiss yen. Same story as the dollar franc. It should find its stop somewhere here on the next support and begin the huge correction based on its daily divergence, daily continuing divergence, which will take this pair serious up. As higher it goes, as lower it goes, the bigger the correction will be. So stay tuned. This divergence will take its effect very soon. Well, I believe it's going to happen during the next weeks. I don't believe it's exact 2 weeks. It might be a little more, but during the next weeks. The same story, by the way, as with the dollar franc. About the dollar Singaporean, we discussed it did the move, friends, from 132 area, 131.90 actually, and the whole way back close to the 20 MA, which was our target. Yes, I believe it will go lower, but first of all we probably will see some plays here, maybe another rise up, and then bam, the down move, the next down move. What about the gold and the silver? Well, the gold looks very interesting, as it looks like we have some flag here. It might be looked this way or just this way. Anyway, break below the last strong low of close below the 1600 should take us all the way lower, and we might see a stop around the 1550 or around the 15. As long as the weekly long trend line holds, as you can see, we will still stay bullish. So let's follow the gold, as it might find a stop here as we discussed and return all the way up. Let's stay tuned for that and see how it continues to move. Well, actually these are my favorite trades, my favorite pairs, and this exactly what I want to concentrate on. To another interesting, well, actually one to follow is the wheat. Well, I believe it should stop. It should stop, and this Marubozu should take effect, and we should see good correction up. And if you go to the daily chart, that's what we have here. We have the support around somewhere in between 565 to 585, somewhere there, and this divergence should take effect, and we might see strong retrace from there all the way back. Well, I believe it's going to be all the way back to 640 or even higher, but it's long run. Let's take a look and see where exactly it's going to make the stop. You can see the area just right here, right? This is the area on the weekly chart, right? This is the area, and it should stop and make the huge correction based on the daily divergence. Let's wait until it reaches this area. A bullish pattern will give us the signal to buy, and the buy will be for medium / long run for well, I would say 50-60 points. But once again, let's take a look and let's watch, and I will update, of course, on the next weekly reviews how it moves. So that's all for this week, friends. I wish you an amazing week, and let's hope we will have another fantastic week as we have had on the last one. So once again, thank you for your time watching this video, and I'll see you on the live trading room. Goodbye and have a good week. Vladimir.